Today, Bitcoin rockets to $69,000, a brand new all-time high. Meanwhile, MicroStrategy stock drops double digits as it plans yet another Bitcoin buy. And David DeWong of Coinbase explains what drove Bitcoin to a new record. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Big day for Bitcoin, with the cryptocurrency hitting a new record high. Now, as of noon Eastern, Bitcoin is technically in the red over the past 24 hours, but that's after the cryptocurrency touched $69,210, a new all-time high. Bitcoin's previous record of $68,982 was reached back on November 10, 2021. The cryptocurrency notched that new record around 10 a.m. It then dropped about 5% and trended lower into the afternoon. Ether, however, rising this morning, up nearly 4% to just under $3,700. Also, meme tokens, which rode the Bitcoin wave so far this year, turned lower this morning, with Dogecoin falling more than 5.5%. Now, crypto-focused stocks also getting knocked down this morning. Coinbase fell more than 2% as of noon after some users of the crypto exchange once again saw zero balances in their accounts right in the middle of Bitcoin's rally. It was the second time this happened in less than a week. Coinbase posted on X late afternoon yesterday that the issue had been resolved. Meantime, MicroStrategy plummeted more than 13% after the company announced a private offering for $600 million in convertible senior notes. MicroStrategy says it will use some of the proceeds to buy more Bitcoin. So let's go back and talk about what's motivating crypto investors. Two big catalysts: the popularity of Bitcoin ETFs, which started trading in January, and the tightening Bitcoin supply ahead of the late April halving event. Today's new record is a victory for the industry that has long suffered from reputational and regulatory risk that came to a head in 2022. We all remember crypto lenders coming under pressure and major crypto companies like FTX collapsing. Since then, Bitcoin has been fighting to prove its legitimacy. Pomp Investments founder Anthony Pompliano joined Squawk Box this morning to weigh in on what's fueling the latest rally. He argued that Bitcoin will go much higher and at a faster pace than expected.
I think there's two big stories. The ETF approvals obviously were a huge deal. BlackRock alone has $11 billion in their ETF. They added $1 billion just in the last day. And so these are massive inflows for just one fund. There's 11 of them. And so obviously there's tons of money coming in, about 12 times more demand for Bitcoin than what the network is producing every single day. But also, as we near this record high, if we go back and we look at past record high breaks, or if we eclipse the old all-time high, 3 of the 4 times Bitcoin doubled in 18 days or less. And so if you think about that for a second, once you break through an all-time high, it's price discovery. What is this thing worth? The world is going to try to figure that out. And 3 of the last 4 times, in 18 days or less, it doubled in price. You add in the fact that we have the halving coming, and we're going to go from 900 Bitcoin a day coming into the supply to 450. And it's very hard to make an argument that Bitcoin is not going much higher and at a faster pace than we all expected.
With Bitcoin on a hot streak, some investors remain skeptical about the young asset class and whether it has any intrinsic value. Fundstrat's Tom Lee joined last call, where he explained a few reasons why Bitcoin is still so polarizing.
It's a generational issue. In crypto, they refer to sort of the legacy financial folks as boomers because, Bitcoin is really being adopted and used by both younger folks, millennials and Gen Z, as well as people outside the U.S. Bitcoin's really useful to the unbanked outside the U.S. I think the second is that because Bitcoin was sort of bootstrapped and, has a genesis block, it didn't grow inside the traditional financial system. So I think those who are used to the venture capital world or institutional access to products first before individuals find it, this is an anathema. It came out through the opposite way. And the third, of course, is that Bitcoin represents trust in a trustless world. And, that's tough for people who are used to dealing with private banks.
All right, sticking with markets for our main story. Crypto World's Tanea McKeel spoke with David DeWong, head of institutional research at Coinbase, about what's driving Bitcoin's rally to fresh records and whether the market is positioned for a steep correction.
Well, David, thank you so much for joining us on Crypto World today. Big day for Bitcoin and the crypto community. Bitcoin hitting a new all-time high. What do you make of it?
Yeah, I think that what we've seen over the last few days is that probably a lot of the short covering move that contributed to this upside is now over, but I wouldn't necessarily underestimate the strength of the flows that have contributed to this. So a lot of the setbacks we've previously seen in other cycles has had to do with dollar liquidity. So that's in the past contributed to a pullback, but I don't think that that's going to be a negative catalyst this time around. I would suspect that even though there might be some kind of short-term moves, just kind of seeing some consolidation here, I think that overall, over the medium long term, we're still going to see a lot more upside for Bitcoin.
Meaningful day for the market, and symbolic, obviously, but beyond the symbolism and beyond the emotion of it, we know investing is very emotional. What does this mean for the market going forward? Does it change anything about the setup that we already had coming into it?
Yeah, I think that the most important thing to note here is that these are pretty much almost one-way institutional flows. And certainly it's kind of reminiscent of what we've seen in other asset classes, like commodities kind of dealt with this back in 2007, 2008, when it kind of was more formalized as an asset class and we saw the large demand there. I think the same thing is kind of happening in crypto today. Now, will that continue? I think that's the next big question. I think it will, in part because, like, just in February alone, we saw $6 billion worth of inflows going into these US spot Bitcoin ETFs. And that hasn't even accounted for the wirehouses, the large broker dealers, actually including this as something, as an asset that their clients can purchase. So until that due diligence is done, like even like the larger flows that are going to follow through haven't happened yet.
You said that this was a technically driven move for the most part. We're looking at Bitcoin today, it hits the all-time high and then it retreats a little bit, I think as much as 5% earlier this morning. That does seem like kind of a natural pullback. Again, when you go back to the emotion of it, that seems like, a natural place to take a pause, especially in a market that's been, pretty hot lately. So going back to the correction or the potential correction that we were talking about earlier, what is sort of driving that? How deep do you expect to see it go? Is there a time frame that investors can be looking at? It would be normal to expect that kind of a correction. What should investors be looking for?
Yeah, my thesis coming into this year was, I was fairly constructive about the move higher. That said, this has even kind of surprised my expectations. But I thought that by the time we approached March, that's when we would start hitting some of the seasonal factors that could, maybe kind of dent us a little bit. So the way I was kind of imagining it was that we kind of get to the kind of seasonal pressures kind of driven by, say, tax payments, people kind of taking profits in order to pay their taxes. And that ultimately the flows themselves will kind of put pressure on the other side so that we'd see this kind of grinding move through March. That's still my base case for the most part. I think that probably the next leg higher won't happen until we get closer to the halving. That's going to happen in April. And I think that some of the positive macro moves that have been driving not just crypto, but also other risk assets forward, I think that some of that may start to moderate, but overall, I don't think that changes my outlook that we're looking at a technology-driven productivity boom that's going to continue over several years, and that's going to be supportive for crypto. I just think that this might be a bit of a blip over the next month.
All right. There was a JP Morgan report, I think last week or a couple of weeks, that was making the rounds in crypto world, saying that the price could correct to as low as $42,000. That is sort of on par with what chart analysts have told me. I think they're looking at some support at $48,000. And then if you look at Bitcoin's realized versus unrealized price, that number is kind of in line as well. It is kind of a steep drop. But again, it's been a pretty heated market. And what would you say to investors who, say we do get a drop that looks like that and they get a little bit spooked? What would you say to them about the rest of the setup for the rest of the year? What are some of the tailwinds that Bitcoin still has?
So I think that the floor is actually higher than what that report suggested. And perhaps that really has to do with the moves that we've seen in the last few days. You look at the 100-day moving average, and that's actually closer to 45,000, 46,000. But regardless, I don't want to quibble about the actual floor level itself. I think that to your question, like what are the catalysts for driving this higher? Certainly, I think the ETFs themselves still represent a big move for that, because I think once we see like more of these wirehouses, like I said, starting to include them in their model portfolios and other things, I think that we will see that the retail involvement in this is just going to grow, as well as like on the institutional side. But also, I think that the supply constraints due to the halving that's going to occur in April, that's something that's very key to watch. I think for most people in the industry, they are very aware that this is going to reduce the rewards paid to miners from 6.25 down to 3 1/8. And that's fairly meaningful, because that will mean that the demand that's out there trying to get into the supply here is probably going to push this higher. I mean, that's just the way the logic kind of goes, if anything. Like, so I'm not counting on us to kind of stop at 69,000, for example, for the year. I think that the trajectory is clearly to the upside on this. Now, beyond that too, I think that we're seeing for the rest of the ecosystem, there's a lot of other effects that we need to kind of monitor. What's going to happen with Ethereum, for example. We're going to start seeing restaking take off as a theme more appropriately. The spot ETH ETFs, I think, could probably get a review probably on May 23rd by the SEC. So I think that these are all things that probably are going to be supportive for the ecosystem as a whole, and probably as crypto as a formalized asset class.
Okay, before we go, we still have more content for you from ETH Denver, and we'll be back again tomorrow with an interview with Chris Dixon, the founder and managing partner of A16Z Crypto, from the conference. We look forward to seeing you then.